I know you tend to avoid them, but are there any higher price stocks that you might suggest that would be worth trading, that would be good? Premium versus buying power, I suppose some other things. Yeah, well, the problem with higher price stocks, like when you get over, say, $300 or $400 a share, most of them liquidity becomes a problem because a lot of people can't trade those things. Certainly, once they get $1,000 a share, you know, they're a problem. Netflix is a huge company, you know, and it just had earnings the other day. But Netflix used to be a very liquid stock. Everybody traded it. I remember trading it a lot when it was trading like, you know, $200, $300 a share. And this was just a couple of years ago. I can't remember the last time I traded Netflix. You know, I mean, it's been at least a couple of years. And the reason is it's trading nearly $1,000 a share. You can see even the volume, share volume, they've only traded 1.4 million shares. That's not a very big amount of shares trading on what was like one of the big Mag 7 type stocks. I mean, it still is, I guess, but it's just trading volume is just not great. Open interest in the monthly cycle isn't great. You know, 100 contracts here, 200 contracts there, only 58, 51. Like, this is not great when you can go and trade tens of thousands of contracts on every strike in Apple, Tesla, Nvidia. So, you know, it's all about liquidity. The more liquidity you have, the better it is as far as your trading. So that's the problem with the higher price stocks. Is they just start getting, they start pricing too many people out of being able to trade them, or people can trade them, but they can only trade so many contracts. You know, if this thing did a split, if they did a 10-to-1 split and, you know, took their share price down from $1,000 a share to $100 a share, like, this thing would be right up there with Tesla and Nvidia and all, you know, all the other big major tech companies as far as people wanting to trade it. But at $1,000 a share, it's just very hard to trade it. Because if you had to take 100 shares of this thing, right? Say you sell a naked short call or a naked short put. Well, you got to take 100 grand worth of longer short shares, right? If you got a sign, if you happen to get a sign, that's just tough. And that's for one contract, right? You can't do multiple contracts. So, yeah, so there's a lot of high price stocks out there. There's a lot of stocks that trade $1,000 a share, $2,000 a share, $3,000 a share. There's several, but when you go and look at the liquidity on them, it's absolutely terrible. It's like nobody's trading them. So that's why you don't see me trading those things. You don't see anybody really trading those things. I still wonder why companies don't split their stock as often when it becomes relevant to do so. Yeah. I think some of them just like having good press, like, hey, you know, our share price is now $1,000 a share, $1,200 a share, $2,000 a share. You know, it looks good, but it also is bad as far as nobody's trading your stock once it gets to that price. Yeah. I mean, the ideal price really is like that $50 to $100 range. I think that accommodates most folks. You get your share price under $200, that's still pretty good. You know, once you start creeping up above $300, $400, certainly $500 a share, then you really start limiting some of the folks that both could buy shares of your stock and trade options on your stock. That's the other thing. You know, if you want, these companies should want their employees, for example, to invest in their company, you know, to buy shares, maybe as part of their 401k program or whatever. Well, if you work for Netflix, you know, how many shares can you buy a month? Can you even buy one share? Can you, do you have $1,000 of disposable income to buy one share in that company every month? If that's what most people probably couldn't, right? That's the problem with the share price on some of these companies is, yeah, that they are pricing out their own employees from investing in the company. Walmart did a really smart thing a while back. Walmart did a 3-to-1 split, I think. And people were shocked at it because Walmart was only trading at like $200 a share, maybe not even that. And they announced a 3-to-1 split. And people were like, why are you splitting? Your stock price wasn't really that high. And Walmart put it out there. It's like, hey, most of our employees, you know, they don't make a lot of money. You know, we're not paying our people all that kind, you know, and we want them to actually be able to afford to buy our stock as part of our stock buying program or whatever they've got going on with their employees. So they're like, we're going to do a 3-to-1 split to get our stock price down, our share price down, so our employees can actually afford this thing. And it made sense, right? Absolutely made sense to do it. Yeah, KMI, you've added it to your watch list. KMI, is that Kinder Morgan? I can't remember what KMI is. Yeah, and that's Kinder Morgan. Yeah, $30 a share is all of that is. Yeah, I haven't really ever traded it. Wow, $30 a share, but this thing used to trade, yeah, much lower, $15 to $20. Yeah, it's been on a tear lately, hasn't it? Trading all the way up to $31 a share. Is it worth adding to your watch list? I haven't really ever traded it. When you said the ticker, I knew what it was. It's a real company. I don't know how the options liquidity is. According to Tasty, they've got a 3-star rating. But let's just go to the options chain. So the first thing I typically check, do they have weekly options? If all they have is monthly options, you can pretty much bet liquidity's garbage. So at least they have weekly options, even though you probably don't want to trade the weeklies. It's just good that they have it. That's a good sign that there's demand for people wanting to trade options on this thing. Then go to the monthly cycle, whatever you think is the active month, and see what the bid-ask spread is. In this case, 5-cent wide. That's okay. 5-cent wide on the at-the-money put, 5-cent wide on the at-the-money call. That's reasonable. Yeah, that's okay liquidity. Only a 3-cent wide bid-ask spread on that. A little wider on this one, 9-cent wide. As you get out here, that's a 20-cent wide, but that's a kind of deep in the money call, so probably not a lot of people really trading that thing. Yeah, I think it'd be okay to trade. Nothing wrong with it. I would say that TASTYTRADE's ranking there as far as a 3-star liquidity, meaning, hey, liquidity's good. It's not great. Yeah, I think that's a fair rating. Sometimes I will say that don't buy into the Tasty liquidity star meter too much, because this is all done with automated formulas, and some things that are very liquid sometimes will have like a very low liquidity rating here. And some things that have no liquidity sometimes will have, 3 stars, 4 stars. So be careful. It doesn't happen that often, but every now and then you'll find products, especially the futures products. For example, the micro ES, MES, we know is pretty liquid. It's not great liquidity, but certainly a lot of people trade it. You go to the liquidity meter for MES, 2-star liquidity. So is that a worse thing to trade than Kinder Morgan? Do you think more people are trading Kinder Morgan or the micro ES? So it's kind of a weird thing. But a lot of the futures, if you go down the futures watch list and just click on the each future and check their rating, most of them are going to have like 1 or 2 stars. And it's like, yeah, for some of them that might actually be the case, like really illiquid things like the Ethereum futures are not great. The Bitcoin futures, nobody's really trading those things. But like the index futures, the bond futures, gold, oil, millions of people are trading that thing. So, those should all be 4-star liquidity, but they're not. And again, it's just because they have a formula that calculates, the number of people trading the thing as far as probably share volume and option volume or whatever. And that formula can be a little wonky on some products. Yeah, for sure. But then after futures, I found myself in a pump and dump group who pumped penny stocks. We've all been there. Yeah, I pretty much took the same road. I took the stocks and Forex and the penny stocks and the futures. We all have to try our hand at a lot of different things to figure out, hey, this is definitely not the way to actually trade and make money. I can tell you right now, Forex is probably the biggest scam that people sell on YouTube. Like, how in the hell are you trading currencies and making any money? And it's the most liquid markets by far. The Forex markets are extremely liquid. Trillions and trillions of dollars are changing hands all the time, and you have absolutely no edge. There's no inefficiencies at all in the Forex market. So trying to find a way to game the system or arbitrage something, it just doesn't exist. Not for you and me. Maybe for high frequency firms, maybe they can squeeze a few cents off of something here and there. But yeah, like just thinking about trading Forex makes my stomach hurt. That's how painful that is. But yeah, the penny stock pump and dumps. Yeah, I mean, I I had some stocks that, I was trading years ago that, yeah, I was part of the dump as far as I owned shares when the dump happened. I had shares of, I think, 2 different companies that actually went to zero. They went bankrupt. So I was holding shares when their price went to zero. And that sucked, right? You got, I don't know, a few $1,000s, worth of shares of something. And then all of a sudden, those shares are worth nothing. Yeah, Forex was your third stop, FXCM, running my stops every single time. Yeah. Yeah, the modern day Forex bucket shops are these modern day funded trading firms. Yeah, I mean, there's no reason to even fool with the prop firms, like the online prop trading firms that are trying to sell people, the whole dream of prop trading. Obviously, the prop firms are making money by charging these people fees to take the test, to whatever. And like, if you can really trade, why would you don't need the prop firm. The prop firm, if you actually learn how to trade, just trade your own money. That's much better for you. Why are you trading somebody else's money? The whole thing just has never made any sense of how people buy into the whole prop firm thing too. It's like, I really know how to trade, but I need this prop firm to give me a $50,000 account to trade their 50 grand. Because it's like, well, if you really know how to trade, you should be able to come up with 50 grand. Like, I mean, I'm not saying you could get 50 grand in a couple of weeks, but certainly within a couple of years. I mean, even you're working a job, you put away a few $100 a month into a trading account, and then you're trading it and doing kind of responsible things and know what you're doing. You should be able to, like, you don't need the prop firm to fund you, 25K or 50K or whatever. Like, you should be, like, if you really know how to trade. But I think a lot of these people know that they probably don't know how to trade, and they don't want to risk their own money. They want to risk somebody else's money. But these prop firms, of course, don't let you really put them at risk. They're there to profit off of you. And of course, some of these prop firms, they actually don't even pay the winners. I mean, we've had several little scandals with some of these prop trading firms that just don't pay out. So yeah, you trade and you think you won all this money and you're going to get a cut of it, and then they never send you a check. You should do a video about that, mentioning how stupid the prop firms are. How taking only $2,500 worth of effective capital and tripling it is just a casino. Yeah, I mean, people don't like it when I talk about that kind of stuff. I mean, think of all the videos I've made now, shitting all over the whole fake trading guru thing on YouTube, and shitting all over technical analysis. And, every time I do one of those videos, get a lot of crazy comments, not from normal viewers, but I get I think it's a lot of actually the fake trading gurus that come to those videos. And then they, I think they're making fake accounts. They're making, multi accounts so they can comment negatively on videos like mine and other people that call them out. And certainly these prop trading firms wouldn't like my video, but the people that buy into the dream also, they take offense. Even though I never want to call people stupid, for buying into the dream of the whole scalping futures thing that the prop firms are doing. Because like I said, I bought into it. James, you bought into it. We've all, tried our hand. Like I said, Forex. Forex is the absolute worst thing you could possibly try to trade. But there for a while, I tried it. Right, penny stocks, complete scam. I tried it. It's not like I'm. In many ways, I'm criticizing myself more on those videos than criticizing other people. And of course, I make the videos, so hopefully people don't have to travel the same road that I traveled, right? Hopefully you can avoid those kind of landmines.